Welcome to ShortView Trading, your morning market hit for Wednesday, 31st of March. What matters today for traders? Well, as we highlighted yesterday, many of the usual correlations across global financial markets and key global asset classes seem to be breaking down. Take the trade-weighted dollar, for example. Typically, a strong dollar leads to risk aversion and equity markets falling, and a weak dollar, you get the opposite. You get a rallying US equity market and indeed global equity markets. But as you can see from the chart in front of you now, the trade-weighted dollar has been strong largely throughout most of this year, and yet the S&P's kept on pushing up to new record highs, and that's particularly marked over the course of the last few weeks. Now, naturally, a large part of the trade-weighted dollar is indeed the euro currency itself, and you get a similar sort of chart if you look at the chart of the euro and the S&P 500 that we're showing in front of you now. Indeed, just like with the trade-weighted dollar, the euro's been weakening throughout most of this year. The dollar's been strengthening against it. In fact, the high for the euro was at 30th of Dec, the back end of last year, yet the S&P's continue to push on to new record highs. So that relationship isn't working as it has been recently. It's changing. And indeed, in fact, if you look at something like the yen, it's even more marked. That relationship between the yen and the S&P 500, the chart we're showing you in front of you now, has really been breaking down since June last year, with the yen behaving quite extraordinarily relative to other currencies in the world. Marked weakness in the yen in recent weeks and months, and some marked strength in the second half of last year. So a number of those key relationships that often play out in global financial markets seem to be breaking down in recent weeks and months. Maybe that reflects the behavior of the dollar. It's very difficult to know. But what we can say is the trade-weighted dollar is now overbought both in the short-term basis, as you can see in the chart in front of you now, and also in the medium term. So in terms of playing currencies, there's definitely some ideas there. Leaning against the dollar, looking for a renewal of dollar weakness is an interesting trade. But in terms of what it means for the equity markets, it probably means that pressure from a strengthening dollar is likely to ease and actually allow markets to move even higher from here. So how you interpret that is key. Of course, it's key to how markets go from here. But what I would add to that is bond yields have been backing up hard and likely been partly behind this strengthening dollar move that we've seen. And also, just like the dollar's very overbought, bonds I think are very oversold, yields very overbought to the upside if you like, bond price very oversold to the downside. So that move is likely nearing its completion, at least in the near term. So with yields likely to soften, the dollar maybe ease off from here, coupled with what our short-term market timing models are saying, and here's the risk appetite scoring system up in front of you now. That suggests to us there's an argument that some upside is likely, some further upside is likely in global equity markets led by the S&P over coming trading sessions and weeks. But for all the detail of how we're playing this and an update on all our daily charts and our market timing models, our 1 to 2 week market timing models, and our view on this market in detail, please see today's Daily Rag available to subscribers via the website. Equally, if you're not a subscriber and you're interested, please take a free trial, 7-day free trial. Simply put in your name and email address, no credit card details required, and we'll send you the Daily Rag for free for 7 days. Or if you like what you hear, please sign up. It's $49 a month, cancelable at any time with nothing further to pay. So what are we watching today? Well, there's plenty of macro data out over the course of the trading session, with Eurozone CPI coming out this morning, and then lots of bits and pieces out of the States this afternoon, including Chicago PMI, pending home sales, and the ADP employment data, all of which are interesting and all of which will be watched closely by market participants. Elsewhere, in terms of key events, it's pretty light today. Not much going on that front. So that's it from us. That's your morning market hit for Wednesday, 31st of March. Thank you for listening. Please do subscribe to these free videos on YouTube, or simply search under ShortView Trading within YouTube, or follow us on Twitter, LinkedIn, and or Facebook. Thank you for listening. Stay safe. Trade well.